helping you to weather good and bad economies without putting retirement on hold. This is the Tumolo Financial Podcast with Ken and Nick Tumolo. Ken and his son Nick know that creating a comprehensive financial plan can align your hard-earned life savings with your retirement goals. Consider them your retirement architects. Now, the Tumolo Financial Podcast with Ken and Nick Tumolo.
So, of course, this time of year, it's not only Financial Literacy Month, guys. Everybody is focusing on taxes. Hopefully, you're not being slammed with some kind of big tax bill. There have been a lot of stories in the news this year about big tax refunds people may be expecting to have. And I'm assuming that's because of the One Big Beautiful Bill Act.
Correct. Yep.
But many still found themselves writing a check to the IRS despite expecting the opposite. There was an article on savingadvice.com saying it's becoming more common for retirees. They're owing even though it doesn't feel like their income has changed all that much. Can you explain why that's happening? And also, how do you help people plan ahead so that they're not writing checks to the IRS year after year in retirement?
So I see this a lot in retirement. And so Social Security sometimes does not ask how much tax you like to be withholding on. Or when you're pulling money from those IRAs, some advisors don't give any sense of, okay, you should pull this amount. Or even if you're looking at a 401k plan, like we said, 401k plan is not truly a plan. They're not telling you, okay, this is how much tax you should pull out federally and statewide. Obviously, they have their minimums, of course, like that. But because of that, they're not giving you any sort of sense of direction when you're not working with someone. Right. And you still might have a big tax bill down the road. So that's usually where I see it, especially on Social Security. Countless of times people come in and I ask them, are they withholding tax on their Social Security? And I hear no a lot more than you would think.
Okay.
And that's where I start seeing that check starts to creep up on people. Okay. But yeah, even kind of looking at the planning piece, since I already talked about RMDs and Roth conversions, I'm going to actually give a different type of story because this just happened actually a few days ago. I had a client, we talked last week, and he told me, Nick, he has a blue collar job. His body's just breaking down on him. I'm ready to retire. I want to retire in the next year, but I really want the house paid off before I retire. How do I get this house paid off? There's about $114,000 left on his home to pay off. So a big chunk.
Yeah.
And the thing too is all of his money is in the 401k. So every dollar coming out of there is going to be taxable. So for him, I was like, okay, let's not pay this off in 1 year. Let's look where your tax situation is currently right now. So let me run some numbers. Let me build it out. And then I'll give you a call next week. And I actually just talked to him yesterday. Yeah. So I presented the plan to him. For him, right now, he's in the 22% tax bracket federally. We are able to squeeze another $100,000 in the 22% tax bracket. So majority of it went towards the mortgage. He also has a daughter getting married this year. So there was a wedding expense as well. So we needed to squeeze some money out for that as well. Okay. But the $100,000 amount actually ended up keeping him in the 22% tax bracket instead of jumping to the 24.
Okay.
And what we're going to end up doing is the house will be paid off January 2027. So we're just straddling tax years.
Yeah.
We're not jumping up 2%. So now he's going to save on $100,000. If he takes out $100,000 this year and next year, let's just use that as quick math. He's going to save $4,000 in taxes because 2% he's saving. Okay. Obviously, you got to add in the interest rates and stuff like that too. Their interest rate is very low. It ended up being a little over $1,000 of interest over 7 months because I did the math on it. So he ends up saving about, I think it was roughly about $2,500 in taxes. But you think about that, that's an extra trip. I know trips a little more expensive, but
if you found a $20 bill lying on the floor, you'd be like, best day ever. So let's not turn our nose up at saving $2,500.
Exactly. I tell this to people all the time, and I ask them, I'm like, if we can change your taxes from $10,000 to $7,000, would you be excited? Yes, it stays in the account and it grows too. So that $2,500 that you're saving is now growing for an additional year, or it keeps growing for you too if you're not ready to spend it. So for him, he was excited to hear that he's saving that much. Yeah, you're not going to have those extra zeros and I'm just going to drop names, Bezos or Musk. But to help yourself out, $2,000, $3,000 is huge for middle class, working class. I mean, that same thing with me. If I found $20 on the ground, I'd be ecstatic too. So planning, it's relative. So like with him, he's getting his house paid off in 2 years. I had another client come in last year and he bought a boat for $138,000 and we're paying off it within 3 tax years because he's in a higher tax bracket. He's in the 24% tax, plus he's 65. So we have to watch out for the Medicare. So right now for him, I did go to the second level for Medicare. Because the planning worked in that sense, but we're getting the boat paid off actually 2027 since we started in 25. So that one was a 3-year planning. So that's why that planning piece is huge. It really helps kind of looking at what your numbers are and looks at, okay, what's the best advantage for me to keep more money in my pockets and my family's pockets. So that's why we offer this Tumolo Retirement Checkup complimentary for our qualified callers. Our phone number is 860-854-3434. Or you go to our website at tfcheckup.com.
Yeah, and Nick, here's a question. How many people have come into you in the past and have said, my accountant's great, I'm getting a huge return back?
I mean, once in a while, but more times they're paying.
Yeah. But that question, that answer alone, I hear it quite a bit, especially with people that aren't working with us yet. They say, my accountant's great, I'm getting a lot of money back. And I hate to, put a pin in someone's sale.
Right.
It really just means that you overpaid.
You were paying, You gave a loan to the government all year when you could have been keeping that money, investing it yourself and getting that interest back yourself. Yeah, that's how Kyle and I look at it. We tried to.
Yep. Yeah, so it's just trying to balance it. It's not that the accountant did a great job. You want your accountant to be good, okay? But at the end of the day, if you're contributing too much into the tax system, that's why you're getting a big return back. And now that we have interest rates, you usually don't want a big return now because that means that the government got an interest-free loan from you. Yeah. And so, so a lot of times what we're doing in building these things out and managing the tax piece of it, we're trying to figure out roughly if someone owes $1,000 or they get $1,000 back. And the reason why I kind of give that range, then it means they're probably doing a pretty good job on their tax withholding. And it's just because the tax laws are a little messy. So if you're in that range, you're actually doing a good job. The other thing, and Nick brought it up, is be really careful when you get into retirement. Make sure that you're paying taxes on your social. We run into that a lot. People come in, they start their social, and the default setup on Social Security is not to withhold taxes. And then all of a sudden they get their tax bill end of the year and their accountant's doing their taxes. And they're like, oh yeah, you owe $10,000 in taxes. I'm exaggerating. But, but the thing is and then the person's upset. And when you dig into it, it's, oh, you didn't withhold enough in these other sources. That's the important part. It's the tax is the tax. And that's the part you have to remember. It's, we could be as creative as we want to be as far as where to draw the money from and balancing out tax rates. But at the end of the day, there's probably some tax that has to be paid. So you have to account for that. Okay. So, and I've run into it multiple times. And I'll tell you a real funny story. And this one I can say Nick's grandfather.
Nick's grandfather, your dad or your father-in-law?
Father-in-law.
Okay, there it is.
He hasn't withheld taxes on his Social Security ever since he started it. Okay. And every year it's the same thing. Ken, I owe money on my taxes. Or Ken, I don't get a lot of money back in my taxes. And he'll complain through my wife because he doesn't speak really good English. And I keep telling her, you have to tell him to start withholding taxes on his Social Security. Guess what? We've told him 100 times he hasn't done it.
Old dog, new tricks. I get it. We've all been there.
Yeah, so it's like, hey, you just got to deal with it. And I'm going to say this. For the person that likes to get a little return back every year because they like to use it as a savings account, it's okay. It's what's making you happy because you get that bigger check. When you go to file your return and you're doing something extra, it might be a husband and wife. They get that return and they go and they take a big trip. It's really, that's the part of the planning that sometimes we have to look the other way, even though we know it's not efficient. but we
Right.
know the person's happy. And the biggest thing about retirement, getting to retirement, is you want to be happy. So
Yeah.
give them try to help them out.
Yeah.
And so that's my little thing with the tax piece. It's really managing the tax piece, making sure that they're withholding enough. Our software that we use here on top of that retirement checkup, it actually emulates a tax return. So a lot of times we can tell roughly what someone should be withholding in taxes and if they're withholding enough or not withholding enough. And we always do. We do that Tumolo Financial Retirement Checkup to start. It gives someone a good idea where they are. And we're also looking at taxes in there. But we do a complimentary for our listeners. Our number, 860-854-3434. The other place and the easiest place to book an appointment, just go to the website, go to tfcheckup.com, and you could click right on it to book an appointment with us.
Investment advice offered through Tumolo Wealth Management, an SEC-registered investment advisor. Content contained herein should not be construed as an offer or solicitation for investment advice or for the purchase or sale of any security, insurance, or other investment product. Please consult with a qualified financial, tax, accounting, or legal professional before implementing any ideas or strategies discussed here.